Apple CEO Tim Cook on stage right behind me here, reminding developers just how much they've earned now through his App Store. Take a listen.
This week, we're going to achieve another huge milestone. The money that developers have earned through the App Store will top $100 billion. The App Store is clearly the best place for you to be rewarded for your hard work and creativity.
Apple also gave a sneak peek, Melissa, of iOS 12, which will arrive this fall. Apple saying it's going to be a faster and more responsive OS, and it's going to run on a lot of devices all the way back to the 5S. There was also a bit of talk about Siri today, a new feature called Siri Shortcuts. You're going to be able to create custom commands Siri can answer. For example, let's say you're going home. That could trigger Siri to text your roommate, maybe set your thermostat, give you directions. You'll also be able to see and control how much time you spend in apps. And remember, shareholders Jana and Calster sent that letter to Apple earlier this year, asking the company to develop software to give parents more control. And a lot of focus today on AR as well. AR Kit 2 was unveiled. That's going to allow two people to play games with each other in augmented reality at the same time, potentially a big deal for gamers there. There was also some new messaging features we should mention. You can now make an emoji of yourself called Memoji. I know we're all looking forward to the Guy Adami Memoji coming soon. And FaceTime, it got an upgrade as well. It's now going to support group video chat up to 32 people. So what didn't we see today? No hardware refreshes. There were some rumors that we might get an update to the iPad Pro, maybe a new iPhone SE. That didn't happen. Maybe that's coming in September. Melissa, back to you.
All right, thank you so much, Josh Lipton. Well, Apple surging to all-time highs today, pushing the Nasdaq to a record close as well. The stock is now nearing the key $200 level and the long-awaited $1 trillion market cap. The stock is up 13%, adding $83 billion in value so far this year. So is the best way to make money in this market just as simple as buying Apple? It seems like you can't really avoid it if you want to at least perform in line.
And good, congrats on the Memoji.
My Memoji is going to have a Josh Lipton feel. It's going to be a bearded Memoji.
The Memoji.
Yeah, I can't wait. I was working on it in the. What do you think about Apple, Guy?
Funny you should ask that, Mel.
So, look, I'm not going to pretend I've been some raging bull, and I have not been. But Katie Hubert at Morgan Stanley just raised her price target to 214 from 200. You recall a couple months ago she said there was going to be some rough sledding, but you buy it on weakness. She happened to be right. And UBS just raised their price target to 210. So for me, it seems sort of a fait accompli. That's French. That we're going to get to 203.45 at current share count, which gets you to $1 trillion.
What is so interesting about this conference, Dan, is that it really puts the focus on services, right? Which is
and they're smart to do that. So in the last quarter that they just reported, they had their highest growth ever, 30% year over year. It made up the largest percent of the total of almost 15%. So this was really focused on how they take this platform to the next level. Listen, I don't find anything that they announced today particularly exciting. I will tell you that the most interesting thing that happened today is that the stock did not crater when Tim Cook stepped off of the stage. It used to do that. Remember, if we didn't get those
that was
hardware,
for a big introduction.
No,
right?
no, it would be WWDC, and they would often do some hardware stuff or something else. And so, to me, the fact the stock did close on its low, but it closed above yesterday's close, which I think is pretty important here. So, you know, it held in pretty decently.
Well, the question was also, do you just play Apple and not anything else? And in fact, if I look at the triple Qs, of which Apple are the biggest weighting, the triple Qs are at fresh highs today. So it's not like Apple's the only one there. As I said, it's the big part of it. But I think you've made money throughout the sector. But back to the Apple story, these guys are focused on services. Yes, this is a company that says they're going to be 18 to 20% on a compounded annual growth rate in services through 2020. That's very impressive. Also remember, folks, that this isn't necessarily more accretive to margins than their handheld business. It's about in line. So, people, I think, get a little carried away in terms of how great services will be for margins, when, in fact, I think they don't do anything to margins, but I think it's a great growth area.
All right, our next guest says the charts point to even more gains for Apple. Chartmaster Carter Worth of Cornerstone Macros over at the Plasma to break it down. Hi, Carter.
Hi there. So, sure. I mean, it's a nice setup. We had a nice action, nice price action today. Let's draw the line several different ways. So here is basically the year-to-date chart, no judgments or annotations by me. But one thing clearly that one could say is this has the element of what is known as sort of a cup and handle, which is to say you approach a prior high, and then after contending with it, you start to exceed it. One way to draw the lines, but it does imply higher. I want to focus on this tight action here, What's important about it is that we broke out above this sort of 6-7 point range, 184 to about 190, 191. And if I pull this back a bit further, the key is that this tight range has been occurring after we initially broke out, meaning we had these sort of tops here from which we broke out, and then we've held those gains, and now we're into a new range. So if you were to take the measured move of this range, it projects about $7 higher, $7 range. And so you're looking at something on the order of 197. That doesn't get you the 203, 204 for the 1 trillion, but that's the inference that there's more to go. Here, now let's talk about this, and this is important. There's always the thought, right, with a big name like this, that it just is too good. It's gone too far. I mean, here we are having gone from 40 to essentially 200 over the last 7, 8 years. But let me do this same chart with relative performance on the bottom. And so now this is a very telling thing. That's the same chart going back to 2000, Apple on the bottom, 40 to the current price. And here is relative performance of the S&P. And if I draw a line along the relative, what we know is this, that Apple is just now breaking out to new relative highs. Essentially, the stock has made no progress to the market since 2012. So if I were to put it this way as a comparative chart, you see it right here. Basically, to think, and we're all subject to this, maybe I'm late. How can one be late if the stock hasn't outperformed the market? It's just now setting up for a breakout. I like Apple here. In fact, it's presumptively better than the S&P.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.